Hello, folks. Welcome back. I am John Najarian, and this is 3 at 3. 3 at 3 every day. We bring you every business day unusual option activity. So, where are we seeing the unusual option activity that day? That's what we're bringing you here, and I'm really looking forward to it because, knock on wood, as I said at uh, just before halftime today. When we are in an environment like this, unusual option activity, or UOA, is unbelievable how many of these things are hitting every single day. And a lot of it's because even some of the best and brightest on Wall Street are sort of confused as to what's going on. And our system doesn't rely on some sort of a best guess, or anything else. It is just an algorithm that is looking for block trades, and where we find them on the offer, we trade them. And I've got some for you today, so let's get started. Here's our disclaimer. We go with this every day, and that just says, keeps the lawyers happy. That just says, you know what John's going to discuss is for informational purposes only. This is not to say that you should use John as your investment advisor. John is seeing what's going on in the market, and he is expressing that to you. So educational, informational, yes, and yes. Let's go deeper into it. W. All right, Wayfair. Now, the reason I wanted to bring this one up, folks, is because we've had multiple readings on this one, and we've had it since it was in the 20s. Bullish readings. As you see on your screen, 20th of March, stock is under 30 bucks a share. We see 5,000 of the 2022. So in other words, 2 years out into the future nearly, they were buying upside calls at the 50 strike and paying $9 for them. Now that, because as I always say, there's embedded information. How far out into the future? Almost 2 years. So that tells you somebody's got a real long-term outlook. That's not like that quick money trade. Number two, the second trade we saw in here, the W on the 30th of March, just Monday last week, we saw 3,000. Again, January 2022, 80 calls being bought for $12.70. Gives you an idea how much it moved from the 20th to the 30th, right? In those 10 days, the stock was up, call it 20 bucks. And now they're paying for the 80s more than they paid for the 50s that are 30 strikes, $30 lower. All right, then let's look at the most recent prior to today. On Wednesday last week, the 1st of April, we saw a bullish call spread go up again, 2022. Long term, people betting that Wayfair is going to continue to do well here, folks. And what has it done? Well, there you see it. When it breaks 30 on or about that 20th of March, and then as you see it moving up into the 40s on or about the 30th of March, and then exploding today to $70 plus, and it's up 38%. Bang! All right, let's see what they were doing today, because there were trades in here again today. All right, this one. They were buying in Wayfair they were selling puts. And when they're selling puts, that's a risk taker. That's like Warren Buffett, Bill Gates, Michael Dell. These are all big put sellers. Same thing with a lot of other smart, big investors like Carl Icahn. Why do they sell puts? Because they're becoming the insurance company for somebody who's seeking that insurance, either a bearish bet, that's why you buy a put, or to purchase insurance against your stock. Well, in this case, these folks were selling that insurance. In other words, they collected $1.70 all the way down. They sold them to $1.50 for those April 50 puts. Now the stock is almost $20 higher than that right now. It was $67.25 when I cited this up on our blog today. 10,000 of them. That's a million share equivalent. So bits of information here, please, John. One, 10,000 options is a million share equivalent because every option in Wayfair is for 100 shares. So $1.70 means every one of those that they sold, all 10,000 of them, they collected $170. That's $1.70 100 times. So that is 170 per option. They sold 10,000 of them. So you guys get the idea. They collected a nice paycheck here, a very nice paycheck. So we are in this. I am still riding a nice position in Wayfair, and this put selling tells me that, and by the way, put selling is not for everybody. My brother Pete hates put selling. I love it. But I'm willing to buy the stock at $50 minus the $1.70 that I collected. In other words, I'm going to be long this stock somewhere, if they forced me to, somewhere in the 48.50, 48.30 range, if they put it to me. Now, that seems like a pretty good bet here at 70, right? Now, that's where the stock is right now, $70 a share, as you see on the graph here. That's a 5-day graph, shows you that big gap higher that we had today. So collecting a put is a great thing, collecting that insurance on the put. But again, not for everybody. Do not leverage it. If you're somebody who normally trades 1,000 shares of stock, that means you should sell at most, in my opinion, not advice, my opinion, 10 lot, because that is representing 1,000 shares of stock. 10 options represents 1,000 shares of stock. So if you're normally a stock investor at that 1,000 share level, 10 lots of options simulates that. And in this case, you'd collect $170 10 times, or about $1,700 before commissions for selling these $20 out of the money puts that, by the way, expire next Friday. Not this coming Friday, Thursday, which is option expiration because of Good Friday and Passover, but the following Friday, April 17th. All right, let's go to the next one, folks. Taking a look at this one, UCO. Okay, what is UCO? This is the ultra crude oil. So it's somebody that's saying, you know what? I think crude oil is going to see some sort of a rebound. For that person that thinks that, they could buy a call, or in this case, sell a put. What put are they selling? Well, they're selling those 250 puts that are basically right at the money. 250 is where the stock's trading, $2.55, and they're selling the 250 puts for about 68 cents down to 63 cents. So that means that if somebody said yours and they put stock to you, you'd be buying the stock at about, give or take, $1.92, thereabouts. So this is not a trade for everybody, just like the former trade, not for everybody. But after this walloping that the crude oil, the ultra crude oil contract has taken, and this one is basically 2x the crude oil index, folks. That's why the graph looks like this. Look at that. As we're falling in January from readings about 23 all the way down here, down 16% today because it's 2x the regular crude oil, falling all the way down here to $2.46. So those are the first two trades of our 3 at 3. Let's get into the third one right now. Third trade, Smile Direct Club. Smile Direct Club, SDC, they're buying calls in here. And these are calls that expire not this Thursday, which is option expiration if you have weeklies, but they're buying the ones that expire April 17th. So give or take 2 weeks into the future. They're buying at the money, the April 450 calls, and they're paying 30 cents, folks. That means $30 per option, which means a 10 lot costs you $300. A 100 lot, which would mean that you control 10,000 shares of stock, would only cost you $3 grand. Again, not advice, but I'm telling you, these are cheap shots that somebody's taken. They bought 12,000 of these, 12,500 to be exact. That's 1.25 million share equivalent at 450, the strike price. So embedded information, please, John. Embedded information is A, 1.25 million. That's how many they bought, share equivalent. Two, the April 17th strike price. They told us time frame, and strike price 450. So that's what they did in here. Take a look and you'll see why. In mid-February, this stock was over 15 bucks. Now it's 4 bucks. Do you think people still want straight teeth at the end of this coronavirus thing? Even maybe before the end of the coronavirus thing? Maybe. And that's why they're buying these calls at the 450 strike. So keep an eye on this one. It's a cheap upside shot. All right. Giving you all that. And now this. Got that lovely lady, brilliant trader and great friend, Bryn Talkington. She's going to be joining us. She is the head of Requisite Capital. They're a big firm out of Houston and Dallas that employs option strategies. It's not their primary strategy, but they employ options to overwrite their funds. In other words, to collect premium. And she's going to tell us about opportunities she's seeing in the markets here today, along with our volatility roundtable, which includes Brian McCormick, Ryan Mastro, my brother Pete, myself, and today, Bryn Talkington of Requisite Capital. Go to my Twitter or go to Market Rebellion Twitter or Pete Nigerian Twitter and sign up for this. It is completely free. All you got to do is put in your name, email address, and you will get a seat at this live at 4 o'clock. Let me see. When is that? Oh, let's see. That's about 46 minutes from right now. So sign up now. Join us at 4 o'clock Eastern for this great volatility, turning volatility into opportunity with Bryn Talkington. Thank you, folks. Have a great day. I'll see you at 4 o'clock.